Hi everyone, it's Tricia with Easy E-mini Trade, and I wanted to go over a couple things on the new setup that we're calling the Slinky, and how you can use the Ichimoku to help validate or confirm your trades. If you're not familiar with the Ichimoku indicators, they're really, really amazing. Basically, it translates into at a glance, and really at a glance you can see past, present, and future. It's really just mind-boggling how accurate it really is. So I'll probably do a webinar next week on that, probably Thursday the 30th, but I'll send you all an invitation and let you know when that is, and we can discuss it further in further detail. So let me go ahead and show you the Slinky. Okay, so what you're looking at right now, this is the NQ, and this is on a 633 tick chart, and this is today, and today being Tuesday the 21st of January. And it's really important, no matter what setups you're using, to have an idea of where support and resistance are. So this this should be 1050, but this is the high on our daily chart prior to today. This is today. And don't mind all of my support and resistance lines on here, but this is today, and previously last Wednesday on the 15th, this is where our new high was created at 1050. It actually might be 1025 on the daily chart. And you can see, looking at today, when you look to the left on this daily chart, you can see the price bar here from Friday, from Thursday, from Wednesday, and then even prior to Wednesday, you can see these bars here creating a resistance area here while it's consolidating. Even though you had some wide range bars, lots of trading going on in there, lots of great setups, and then further to the left you can see still some consolidation within this still same general area as we're dealing with today, the lower end of today and Friday and Wednesday the 15th. So when you see something like that, what that's telling me is that I have lots of support and resistance around, and it could be a little difficult to get the follow-through on some of the setups. So if you're trading off a smaller chart, shooting for smaller targets, like 2 points, for example, on the NQ as your first initial target, no big deal. But when you're trading off a larger chart, looking for 3 or 4 points as your first target, it could be a little more difficult. So the Slinky is a really simple setup. We did a webinar on it a couple weeks ago, and we're using the super trend stop for our main indicator on that, and that's these dots here. And I'm not going to really go into it. I'll go over more of it when I do the next webinar and show you how you can use the Ichimoku indicators with that setup. So this green cloud, it's green here but pinkish here, that's part of the Ichimoku, as is the white line here, and this pink line, and this blue line. And I'm not going to go over the names or anything. Again, I promise I will break it down in the webinar because there's a lot of information that goes with it. But what I wanted to show you is this is today, and here's that high area on the daily, 1025. So above that is new territory. So if you're not familiar, usually when you're hitting new territory on any chart, like in an area where we have never been or an area where we haven't been for many, many years, it can often be difficult to get the follow-through. So if you were to take a trade right around the 1025 area, the likelihood is that it will pop up and then retrace. And then, like here's, now we have new highs here this morning. This created a new high. So when we bust up through that again, we take out this high again and create a new high, and then it pulls right back. That's pretty typical of what we see in new territory. So we get this bar right here that I've got marked at 930. Let me just make this a little bigger so you can see here. And this is a 633 tick chart, but you can see this bar here right off the open, closes above our super trend dots, but I would not be interested in that for a couple reasons. It's right off the open, and then I've got that daily area at 1025, so that's the area that I would be thinking, okay, I'm not going to get much follow through. But if I could get a setup where off of one of my smaller charts where I have more room up to that 1025, then it could look interesting. So you just want to think ahead a little bit. Okay, if I take this trade above this bar here, how much space is there? And off this 633 tick chart, a good target on the NQ is 3 points. If you're trading off something bigger, you can use 4 points. But if you don't have the space, don't sit there waiting for 4 points or 5 points. Use a smaller target. So ideally, when we're above the cloud, we're looking for buys. When we're below it, we're looking for shorts. That's a simple explanation. And then there's other pieces to the puzzle, and I'll go over that during the full webinar. But here we get a close below our super trend dots here, but we are still hanging right on this Kijun line, this pink line, and you can see that it's flat, and that often will act as support. So taking an entry off of this chart as a slinky, getting our close below these dots, it's not a great spot to take it. First of all, we're above the cloud and we've got our Kijun line here above us. Now, with that said, if we were below this Kijun line, this pink line, we could take that trade and anticipate the next area of support as our target, which is the round number of 3,600. On the NQ and most other instruments, you'll find that those round numbers often hold, and you can spend a lot of time around them. And if you don't believe me, just look at any chart on a 15 or 60 minute and pick out those round number areas, and you'll see exactly what I mean. So this wouldn't be a great setup to try to take, and it was passed on, did not take it. Here we get a close above our super trend dots, but we're still in that high area on our daily, so not interested because I'm anticipating no follow through. Here we get closed below our super trend dots here. You can see it right here, this bar marked at 10.10.22, and we've got room down to that 3,600 and also down to the cloud. So even though we're above the cloud, we can anticipate price finding its way hopefully down to the round number area of 3,600. Or if, let's say that we didn't have that there and it was wide open down to the top of the cloud, we could use the cloud as the target area. So if you're not on the correct side of the cloud for taking the slinky, just see how much space you have to the cloud. So here, this would be a setup using the Ichimoku cloud. We get closed outside the bottom end of the cloud here, and realistically you could enter in under that bar there. No dots involved because our super trend dots did not form here, but a good spot to take an entry because we are wide open until we hit our next area of support, which I don't have drawn on this chart, but you can look at it on a 15-minute chart and see those areas pretty easily. Here we have our super trend dots. Now we're under our cloud, and no big deal if we have room up to it and through the areas of resistance, then great. But realistically, looking here to the left, you can see all this congestion here created. So you would be looking at that as the general area as your target if you were to get a close above these super trend dots. So here we don't get closed above, here we don't get closed above, here we get closed above, right above this bar here, and that is at 11:42, and that's of course if you're trading at that time. But on the next bar it never triggers above the high there, so pretty much nothing to really do there at that point. Then you would no longer be interested in it. Here you get a close outside the cloud right here, but you would be buying that right into that 3,600 area. So if you were to take that trade, you would have to be aware that you might get stuck there. So when taking the slinky trade, just be aware of where the support resistance areas are and if you've got room to take it. If not, then just take something off the smaller chart. Like if you scroll back here to Friday, let's look at Friday real quick. So we know that we're still in the same area of congestion because I showed you on the daily chart. I'm just going to scrunch this up so you can see. the 15th through. Okay, so here's the 15th. So you can see all of this congestion. Then we have the 16th. Still lots of congestion, all in that same exact area. And then we go on to Friday. Same situation, still in that same general area. And basically we're hanging between the 3600 area and the high from Wednesday, the 15th at 1025. And then, of course, we've created some support here as well. But generally, you can see that we've got lots of congestion there. So here's Friday. So here we get closed above our super trend dots, but we're right into the cloud and into 3600. So not really the best chart to be taking an entry off of. If, like I said, you take a different setup off of like our 1-point range chart, which gives you room up to the 3600, then great. Take it and use 3600 as your target area. Here we get closed below the dots, the super trend dots right here. So you could take that on that chart. You're below the cloud, everything's in line to take that as a short. Now, you would likely want to be aware of some of the support areas and make sure that you've got room to those areas because, as mentioned, we've been going sideways and you've got a lot to contend with. Here we get closed above the dots, but we're under the cloud, so we could always use the cloud as the target. However, we know that 95.50 is a strong area of support and resistance when you look at the daily chart here. And I'll just make this a little fatter here so you can see it right here. So we know that that's a strong support resistance area. So you would likely want to pay attention to how much space you have up to that area. So would you like to take that trade? Probably not. Even though, it works out, not the best place to try it. So what I'm trying to get at is if you're going sideways, please be aware of how much space you have. Don't just take it because it's setting up. You have to put your thinking caps on and do a little work and just put the time in, be aware of where support and resistance are, just so you can determine if you're taking a good trade or not. Obviously, there are trades that you're going to pass on that are going to go on to work out, and there are going to be trades that you take that don't go on to work out. That's just trading. That's how it is. Here you get closed below the dots right here at this 104 bar, and we're right in that area of 95.50 again. That's that strong support resistance area. But what you could do is you can look and see where the lower part of the cloud is and take that and use that as your target. So I hope that helps. Like I said, I'll do a webinar on the Ichimoku and doing a little more with it next week. What I wanted to show you was this day here, and this is the 14th. This is Tuesday, very strong trending day. And here we go. So realistically, when you have a strong trending day and you're going to try the Slinky, you're going to want to stay with the trend, and you're going to find that you're not going to have very many of those setups, the Slinky setups using the super trend dots. So here we get closed below these dots on this yellow bar, and I don't think that would have triggered. Let's see, I think it actually did trigger, but I just want to point out that you're above that Kijun line and you're above the cloud. So if you're above the cloud, it would be a good idea to at least have price closing below this Kijun line so you don't get that. So that would be a good one to pass on. Here you have a close above the super trend dots, and we're above the cloud and nothing's standing in our way, so you could take it off of this 633 tick chart. And a 633 tick chart for me might look different than a 633 tick chart for you. For example, a lot of people in the room are using a 1,000 tick chart when they're using Ninja because it matches my 633. So the thing about tick charts is that we're not all going to be exactly the same and have the exact same entries and the exact same bars, because each bar on those charts represents a number of trades. And depending on our data feed, our provider, our internet speed, our computer speed, all those things, they tell us anyway, come into play. That's why we aren't all exactly the same like we are on time-based chart or most of the time on range charts. So I hope that helps you guys, and if you have any questions, shoot me an email, and I'll let you know when I'm going to do that webinar next week, okay? So have a great day, you guys.